Hey everybody, I'm a Ninja here. I hope you're doing well. We're going to talk about mortgage rates, we're going to talk about the Fed, we're going to talk about the bond market, and we're going to talk about what is coming next. Get this thing off. Story out of Zero Hedge. I don't have any mics today. Can you guys do me a favor and let me know in the comment section if you can hear me? I'm a little insecure. I have audio insecurity. All right, here we go. Out of Zero Hedge. Exploding mortgage rates approaching 8%. They're actually at 8% right now. Technically, if you Google right now, ooh, let's do it right. No, I can't. I'll lose the story. Google 30-year mortgage rates, hit enter, and tell me what the Google graph's showing right now and put it down in the comment section. I'm pretty sure we're at 8.55 right now. The 10-year bond is moving up. I think, what were we at, 4.67 earlier? And it has nothing to do with the Federal Reserve. The fact is, people are not buying bonds. Why did I sound like that? Sound like I was working somewhere. Oh, no buying bonds. India's not buying bonds. Okay, before I offend everybody, let's do this. It says, as we previewed yesterday, the bank rate average 30-year U.S. mortgage this morning has spiked 8 basis points, the highest level in 23 years. One not seen since August 25th of 2000. Wait a minute, hold on. So we're at like 8% on Google? Could have swore it was higher. It says a mind-blowing 7.88%, which is insane when one considers that 3 years ago, the same mortgage was less than 3%. And now think about this. I'm gonna show you a chart right here, and you know it's backwards. So, I mean, mortgages, right? Okay, wait, hold on. This chart goes back to, stand by, the year 2000. So, this is exciting. That's the year 2000. And everybody's only known prosperity. Now, what's even crazier than that is here we go with the great financial crisis, right? Everything goes down there. I know I need like my nails done. But this right here is insanity. And when insanity hits the markets, that's when we make money. And the cool thing is we have a certain amount of time to make money. 2024 is going to have fireworks. With that being said, I haven't talked about this for a week. I threw a few discount links to the real estate crash course down below, $250, 75% off. When they're gone, they're gone. All right, here we go. It says one thing is certain. Nobody, and we mean nobody, who can't afford 100% cash down can afford to purchase a home today. Boy, they really screwed this up. It's can't. You can't. Let me reread it again because they forgot the T and the little thingy. One thing is certain, nobody, and we mean nobody, who can't afford 100% cash down, can't afford to purchase a home today. And that just blows me away. They're just like, it's just gonna keep going up and up and up. And I'm like, are you a realtor? Yeah. It's insanity, but it's okay. Don't worry, I've been through this before. And we're gonna have some, the sun will come out tomorrow. Bet your bottom dollar. Hey, I'm here all night. Try the view. You try and film a YouTube live stream with a bunch of people nearby with a lot of energy. I've like found the only quiet hall. All right, here we go. For content or context, the chasm between the effective rate of around 3.6% that current homeowners have on average and the shocking 7.9% current mortgage rate is impossible. Indeed, the latest data from the Mortgage Bankers Association confirms this. According to the MBS, total mortgage demand fell 6% compared to the previous week. It says mortgage rates continue to move higher last week as markets digested the recent upswing in Treasury yields. Can you guys do me a favor, real quick? Pop over to CNBC and let me know, go to the 10-year bond and let me know the rate right now, where we're at. I want to see something. As you guys all start doing it, it'll pop up on my screen. I want to talk about that. Now, they're digesting these treasury yields, right? This is from Joel Kahn, MBA's vice president and deputy chief economist. As a result, he says, mortgage applications ground to a halt, dropping to the lowest level since 1996. So we are constantly seeing these dates coming, they're getting farther and farther. Like, we haven't seen it this bad since the middle of the pandemic. We haven't, stand by real quick, I gotta do something. There we go, right now. We haven't seen numbers this bad since 2008, since 2001, and it just keeps going back and back and back into history. And things are going to get worse and worse and worse. Remember, keep your head up high and get ready, and you're going to strike. I was talking to someone, I might have said this already, had 900 doors. I was talking to them at Silver Symposium, subscribers to the channel. They've sold like half their portfolio. These are successful people. They are getting ready. I talked to a gentleman the other day who has 50 rentals, and he told me he's been in real estate for 30 years. Told me he took the course and how much he enjoyed it, and I was shocked because I'm like, wait a minute, if you're a veteran, that course it's for people that have been doing it a while. But I said, what did you like about it? And he goes, because it reminded me of all the things that I'd forgotten in the beginning, and really these cycles and how they work and how to position yourself the best. That gave me a lot of hope. Actually, this last weekend gave me a ton of hope. As a matter of fact, let me just take a little quick break here and tell you, every successful person in this industry that I talk to believes in Jesus Christ. Just want to say, just a weird little coincidence. Type 1 if you agree and understand why that's a big deal. Sorry, I digress. Back to mortgages. Applications for a mortgage to purchase a home fell 6% for the week. Now, we're getting close to double-digit drops week over week. That's big. And we're 22% lower than the same week 1 year ago. It's a big deal. Okay, someone's saying 4.733. If that's the case, and I believe you, that's big. That means we're going to be touching like a normal average mortgage, 8%, in the next week or two. This keeps going up. And again, my new call, because I said mortgage will be 8%. I said it last January. It'll be 8%. Well, I'm telling you right now, it's going to be 10%. Even with, and it's going to exacerbate it. It's going to be worse because of the Fed's raising of rates. Okay, right now rates are out of control, and the Fed can't rein them in because Paul Volcker isn't alive anymore. And I want you to understand that Jerome Powell really thinks highly of Paul Volcker, and eventually he's going to have to do something big. And we're talking, I'm going to be honest with you, I think we're going to see a 100 basis point hike sometime next year. Just clip this, remember this. All right, here we go. So applications for a mortgage to purchase a home fell 6% for the week, and we're 22% lower than the same week a year ago. Okay, again, it doesn't matter. There's a bunch of people that are having 3.5% mortgages, a 3% mortgage. It doesn't matter. They're locked down in their house, effectively locked down. They cannot move. So the velocity is done. So now you see price declines in all kinds of metropolitan areas, and we're seeing that all over the place. They were 22% lower than the same week a year ago. That's huge. And the purchases continue to sink. Applications to refinance a home have absolutely imploded for obvious reasons. There is nobody in the market that hasn't managed to refinance at a lower rate in the past 23 years. And it dropped another 7% for the week and was 11% lower than the same week a year ago. Refinances now make up less than 1/3 of all mortgage applications. Let me stop there and say something very serious. Anybody, and I repeat, anybody that is refinancing a loan right now is in very serious trouble. Perhaps 1% of those people are pulling out money because they're really good at money. Well, I can't even say that. They're gambling with that money if they think they're going to pull it out and do something great in this market with that money. Okay, so 99% of the people refinancing homes right now are in serious money trouble. They are consolidating debt, or they cash out and they're getting ready to pull the ripcord, and go walk into foreclosure. Okay, that's going to happen. You're going to see a lot of foreclosures explode in Q2 of 2024, and before that, a lot of people are going to pull, cash out, and walk away. Because why not? Now, I don't suggest that because that's not honorable, and that kind of action will never be blessed. But you know what? Thieves seem to get ahead for a little bit, and then they fall. They always fall. So it says here, according to CNBC, just 2 years ago, when rates were settling multiple record lows, refinance demand made up roughly 3/4 of all mortgage applications. So you've seen refinances be 3/4 of the market. Now they're 1/3, a total flip. And if you want to think about flip, it's about to go. And that's exciting. I gotta be honest with you, I really love it. It's like that one scene from what is Apocalypse Now. I love smelling napalm in the morning. That's what's gonna happen because the these markets are going to absolutely get bombed. It says the purchase market slowed to the lowest level activity since 1995. Think how bad it is to be an agent right now. As a matter of fact, one movement I'm seeing with agents is that agents are coming together, and the agents that have been in the market for a long time, they see these cycles, they're starting to grab onto other agents, and they're doing these team efforts because, one voice isn't as strong as five. And so they're like, hey, look, you've got no business right now. I'm going to try and help you. Let's all get together, put our heads together, and try and sell this one house. And so you're seeing these team efforts, and which is exciting, but you have to understand how big it's going to be in the future here. All right. It says here, again, the purchase market slowed to the lowest level since 1995 as the rapid rise in rates pushed an increasing number of potential home buyers out of the market. This comes from Khan as well, who also noted that the adjustable rate mortgage applications increased. So now think about this. I've told you this before. Adjustable rate mortgages right now, as of April, when you look at April alone, 2023, and I haven't gotten the new data out yet, 45% of all mortgages being pulled out in April, 45% of them, from $1 million and higher, were ARMs, adjustable rate mortgage. From $400,000 to $1 million of all mortgage applications being pulled in April, 18.9% of them were adjustable rates. To give you some context, the highest level of adjustable rate mortgages throughout all of the upcoming move into the great financial crisis. So we're talking about between 2005 to 2006, 18% of those were ARMs. We have now blown past that. And right now, an adjustable rate mortgage, let's say a 5-1, 7-1 ARM, may only save you 1 point. So we're sitting at like maybe low sixes. I ran into someone, I'm sure he's watching right now, and he says, your stuff's really scaring me. And I said, why? And he goes, because I'm buying a house. And I asked him, and I don't want to share too much, but I asked him what kind of house he's buying. And it's one of those situations with, it's a big house, an expensive house, and they've got to go hard money right now and then hope that they can refinance in a few months into something lower because they're not able to get funding. The other thing is this insurance implosion is so big. We've never seen something like this in the history of our country. And since you need insurance to buy a home, you're going to see even more foreclosures. This is going to be the greatest crash of our lives. And the cool thing is, you still have time. You have time to prepare. But it depends on, are you ready to prepare? So I put the discount link to the course below. It's 75% off, $250. If you want it, cool. If not, no worries. But I will tell you this, after this last week, I met a lot of you, hundreds and hundreds of you that have that course. And a lot of you are in the real estate game, and you gave me the reason I needed to take that price higher in the future. And I got a really cool plan. With that being said, I thank you so much for watching. The Economic Ninja is out.